Friday's market closes mostly higher with the exception of the wheat market. Here to visit about that, Arlen Suderman with StoneX Group. So soybeans, the big up week that we saw in the soybeans pushed by weather, and product values were really strong too, weren't they?
Oh, they really were. And a lot of that goes back to Argentina, and where their economy is in such shambles right now. The currency is falling. The farmers there would rather have soybeans in the bin or in the bag, shall we say, there in Argentina, than money in the bank that's losing value. So they'll actually barter with soybeans to buy things that they need rather than with pesos. So they're hanging on to them. It means crushers don't have enough soybeans to crush, reducing the availability of soy meal and soy oil to be able to export. So that's helping increase our demand a little bit. We're seeing strong domestic demand for meal as well. And it seems to be a choice of soy meal over the DDGs right now, and that's helping support the product market. So soybeans have the weather factor and the soy meal strength that's really driving it. Momentum is driving it. The funds want to get back into these with inflation still a factor as well.
Yeah. New contract highs for like 5 days in a row in soybean meal, so that pushed it. But like you said, weather was another factor. Market is scared that we're losing yield. Are we? And do we have enough weather premium in the market at this point?
Yeah, I don't think we've lost a lot of yield to this point, and it's from this point forward that I'm concerned if these weather forecasts verify. We're looking at by the middle of this week, looking at highs near 100 in parts of Iowa and surrounding areas, and I'm really concerned about the overnight lows, getting up in the mid to upper 70s, close to 80 degrees in Iowa and some other parts of the Midwest. But that's really going to be the central part. It's really difficult. That really hinders grain fill for corn especially. And I'm really worried about the small beans. We've got a lot of beans that have not canopied over, meaning the sun can reach the soil. That tends to increase pod abortion on those lower nodes. And so that's a concern in addition to drying out the soil faster. And we're going to have to hang on to all the moisture we can if this forecast holds. Where there's going to be some showers, but with this heat that's coming in, it's not going to be enough looking at the evapotranspiration rates.
So I'm curious, you mentioned funds back in buying in the soybean complex here this week. So the November contract, I think, has had about a 68% retracement now from the July lows. So how much longer will the funds keep pushing this thing, do you think?
Well, there is some inflation play in here, but this is primarily a weather market right now. So they'll be supportive until they know more about how the weather is going to play out. I think they may be a little bit disappointed in the August crop report because that's going to be August 1 conditions, and some of the private estimates coming out the same way. That may throw a little bit of water on their bullish fires in the near term until maybe we see some of the crop tours that start coming out, the private crop tours, middle and latter part of the month. They get out and kind of see what's happening. But a lot of this is going to be about seed size. That's particularly for corn, and that's very difficult to really see until you get the combine into the field.
Yeah. What are you thinking we're losing in terms of yield on the corn? What is the trade thinking we're losing at this point?
Right now I'm working with a number of 2 to 5% loss if this forecast verifies. Can it be worse than that? Yes, we just don't have enough evidence to support that yet. A lot of it depends on the duration of this, how many breakthrough showers that we get. We know with today's genetics, if you get some breakthrough showers, you can kind of really get by and to have less loss. So I'm working in that 2 to 5% yield loss range right now, and then see how this forecast plays out.
And so corn, does it have enough of its own story to keep moving higher here, or does it have to have soybeans to pull it along?
The soybeans certainly help it. And I think right now the trade is focused on soybeans. So from that standpoint, corn does. Longer term, fundamentally, corn really can't afford losing. I believe that corn's going to lose some more acreage when we see the updated NASS survey of Minnesota and the Dakotas that they told us they were going to do on June 30th. That'll be reported on August 12th as well. So if you lose some acreage, lose a little bit of yield, all of a sudden this balance sheet gets real tight, and it's something we have to keep monitoring throughout the coming year, especially with Ukraine still restricted. Even if the boats are able to flow, exports are still going to be restricted out of Ukraine.
All right, that leads right into the next thing I was going to ask you about in terms of the wheat market. some talk on Friday that there's some boats moving or some ships moving. Is that going to keep a lid now on this wheat market or not?
Yeah, we certainly saw that play out at the end of the week. It seemed to be one of the cooling factors, in addition to the fact that wheat's not immediately being hurt by this heat in the Midwest, et cetera. So I think the trade is really worried about that. I still see a relatively tight balance sheet. We still have some issues here. I think exports in the U.S. are going to be stronger than what the trade currently sees, and certainly more than what USDA sees over the coming year. But we really don't have the headlines to support that in the near term. And so the focus is going to be how many boats get out of Ukraine and how many of them carry this new crop wheat that Ukraine's harvesting. As we watch Russia, Russia's got a big wheat crop, but they've been having a lot of persistent rains as well. And the quality looks like it's really hurting in that Russian crop. That may increase demand for some of the U.S. hard red wheat in order to blend with it.
Move over to the cattle market. We had a higher day on Friday, but we were lower for the week in both live and feeder cattle futures. We've had this softer cash and the premium with the futures. Is that the main problem that we're seeing with that market, or is it something else, Arlen?
Yeah, it's just incredibly stagnant right now. And we've been seeing some good slaughter rates. We did start to see at the end of the week some of the product prices start to get a little bit soft. So we're okay, is this kind of a stagnant demand period that we run into for beef? It's too hot to barbecue, so to speak. That's one of the things we're going to be watching over the next couple of weeks and see what that product demand does. The cash market was on the soft side, down about $1 in the Southern Plains. The dressed weights in the north were down 1 to 2. So that softness really kind of hurt relative to what we saw in hogs.
No doubt. And hogs, new highs for the move on Friday, August above 120. Cash and cutouts have been pushing that market. How much longer does that last?
We've been watching for that seasonal time when the weights start to go up again, the carcass weights, and the numbers start trending higher. We haven't seen much evidence of that yet. And so product demand has been strong relative to supply, even with these weak exports. The pig numbers aren't what USDA is predicting. And I think a lot of that's reflected disease problems still in some of the farrowing barns. The heat has hurt performance, so it's helped hold the carcass weights down, and the forecast really doesn't help that too much either. We saw cash hogs last week almost get up to what cash cattle were trading at. Then they kind of pulled back late week again. We'll have to watch this week and see if we can get that momentum going back up there again, back toward those cash cattle levels. Very unique situation there. But the demand supply just continues to be tight relative to demand domestically.
Yeah, and the funds have been liking that market too. I'm sure that's part of the story in addition. All right, thanks for joining us. Arlen Suderman with StoneX Group.